Okay, on this stock, I lost 1.15%. First, let me explain where I bought the stock and where I exited. So I bought the stock on the yellow line. The red line is my stop loss, which is at 8%. And I sold on this day. I bought here on 12th of July and I sold on 15th of July. So let us first understand why I bought the stock and why I sold the stock. So first, let me put the moving averages. So see blue, green, red, the 50-day is above the 150-day and the 150-day is above the 200-day. So this is a nice stage 2 uptrending stock. That is one reason I bought the stock. Next, let us look at the consolidation in the base. So this is a very large base. Okay. That's a mistake I made. When there is a very large base, we need to be cautious. But let me draw the contractions in the base for you to understand. So this is 0.1. This is 0.2. That's 0.3, 0.4, 0.5, 0.6, 0.7. So as you can see here, there are 7 points in the base, 3 contractions in the base. Okay, first contraction, second contraction, and third contraction. As you can see, the contractions are they are reducing in size as we go towards the right. Okay, plus there are more than 10 candles in the base because we want minimum 2 weeks of consolidation. This is not just 2 weeks, this is almost 2-3 months. Okay, so 2-3 months of consolidation, more than 4 points in the base, more than 2 contractions in the base, and a stage 2 uptrending stock with rising moving averages. Okay, these are the primary reasons why I bought the stock. So I placed my order at point number 5, which is my yellow line. And then I bought the stock here on this day. Okay. Now, if you see on this day, the volume was high, but the closing was weak. If you look at this candle, the upper shadow of the candle is longer than the body itself. Okay. And there is no lower shadow. See, upper shadow means bearishness, and lower shadow means bullishness. Okay. So in this case, there is no lower shadow, but there is upper shadow. So this is a bearish candle, although it is green. But one good thing about that candle is that it creates a rising window. See, between the high of this candle and the low of this candle, there is a small difference. That's called a rising window. Now, a rising window becomes support. Okay. Now, that became my mental stop loss. The high of this candle, which is the low of the rising window, that became my mental stop loss. So I decided that I'm going to keep my stop loss at 8%. As long as the stock remains above this window, I'm not going to sell the stock. And see, immediately next day, the stock began to pull down. It was closing below the high of this candle, which is the low of the rising window. So just 2 minutes before the market close, I got out of the stock and I booked a net loss of 1.51%, and my position size was 2.5%. So 2.5% multiplied by 1.51%. So it's a very small loss on an entire portfolio level. And see, selling the stock here was a good decision. It continued to fall down. Now remember, this is not a failure of the base. This is a failure of the buy point because I went in too early. Okay. The base is still valid. It is still a stage 2 stock. I might buy the stock again as it comes up and consolidates. Okay. Just because I sold the stock doesn't mean that I will not buy it again. Okay. Now, one mistake I made here is first, the base is too tall. Okay. I did not pay attention to that. So from here, 0.1 till 0.2, okay, till here, it's 35% decline. Normally, bases should be 10 to 20% decline, but this is 35% decline. So it's a D grade base. See, A grade base is something which contracts, say, 10% from 0.1 to 0.2. B grade is up to 20%, between 10 and 20. C grade is from 20 to 30. and D grade is 30 to 40%. So this is a D grade base. Okay, it has got a lot of shakeouts. See, this low was taken out. This low was also taken out. So a lot of shakeouts, lot of volatility in the base. So in such cases, what I do is I draw the base completely. Okay, I plot that entire base. And what I require is in the topmost quarter of the base. So I have divided the base into 4 quarters. After point 2, I want a lot of price action, lot of consolidation in the top quarter of the base. That is the proper buy point. Here, if you see, there is only one candle. See, only this candle has closed in the top quarter of the base, and probably this candle. Rest all the candles are below that topmost quarter, which is a bad sign. It's a negative sign. And I did not pay attention to that. I bought it in the second quarter. My yellow line is in the second quarter of the base. So that's a mistake I made. I bought in too early. Now I will allow the stock to go up, come in this shaded area, fluctuate there for 2-3 weeks. And once I get a nice buy point, meaning 10 candles in the base, 4 points in the base, and the blue, green, red, the moving averages. Okay. As long as those three conditions are satisfied, I will buy the stock again with a 2.5% position size. Okay. But for now, I have booked a 1.51% loss here, which is very small compared to the gains I have made on my other stocks. I have made a lot of videos. You can check how I have acquired net profit on other stocks that I have bought. So in comparison to those profits, these losses are small, which is our objective. As a professional trader, my goal is to keep my losses small and keep my gains bigger than my loss. As long as I continue doing that, I will be a consistently profitable trader. That's the only way. I cannot avoid a loss. I cannot eliminate a loss, but I can minimize the damage. And that's the idea. Okay. So I hope you learned from this. This is a very tall base. This is a very loose base. This is a very weak base. In such cases, wait for the stock to come in the upper quarter and then pull the trigger. Okay. That is a lesson that I have learned from myself, for myself. And I'm now passing on that lesson to you. Thank you so much.